conditions for some kind of tactical relief soon. Now, when I say soon, that usually means in time as opposed to in price. So now you're seeing a little more of an indiscriminate phase of the selling.
What's good? What's good?
NASDAQ more oversold than it's been.
What's good? What's good? What's good? What's good?
So those are just sort of the prerequisites to have some kind of snapback. It doesn't mean
What's good, y'all?
we really have broken trend, obviously below.
Bro, the market is crashing. The market not crashing, man. Chill, man. Stop panicking, man. That's why I can't give you a talk, man. Chill out. The market not crashing, man. Calm down, you hear me?
Negative reasons to backfit to the price action.
It's just not hitting 10%, which means you're in a good sell-off, which is okay. I don't know why the hotel TV acting like this, so I don't know, y'all.
Where the hawkish kind of leaning of
Right.
in the market positioning.
It's more than just buying a dip. Like, so you got to understand when to buy,
From this storm, whenever that
right? You got to understand when to buy. So it's not so much just buying a dip. So this right here is the VIX. As long as the VIX is up, you know the market is going down. But the market is just correcting itself. So here's one of the things I want you to understand about the market. Yeah, I don't know what's going on with the TV here. I mean, shit is crazy. All right, so here's what I want you to understand, right? Anytime...
Mike, meantime, VIX curve inverts at the bull-bear ratio near some multi-year lows.
Okay, let's see what they're saying right quick.
Argue that if earnings come in halfway decent, that those three things set up some opportunities. Without a doubt, those are the positioning and fear gauges that are telling you that people have done an awful lot of kind of retreat.
Let's just see. We're going to talk about it. Let's see what they're talking about right quick.
You have to throw out one caveat, which is mechanically speaking, in this kind of high-stress environment that shows those mechanical breakdowns, that's when you get these big air pockets. The crashes happen from oversold levels, not from overbought levels.
Yep.
Not to say that's what's going on right now, but you have to keep in mind.
Wait, be patient. Be patient.
It doesn't mean in a timely way everybody together.
All right, so the VIX is an invert, right? So the VIX is if the market is going down, then the VIX is going up. If the market is going up, then the VIX is going down. So it measures the volatility in the market. You feel me? So when the VIX is going down, that's what I'm saying. Volatility is the VIX. So if you see the market if you see the VIX in the green, that means the market is going down. If you see the VIX in the red, then that means the market is going up. So I'm gonna explain something to y'all right quick. Let's just let them talk so we can see what they're talking about first.
Yes, all that stuff fits. I think, though, it's a little bit maybe more prosaic than that right now, which is, reminds me of 2015. We're going to do the first rate hike after the global financial crisis.
Let's talk about it first. Let's let them talk first, then we'll have our conversation.
Back 8% or so. There was a Chinese devaluation.
And I don't know what's wrong with the TV, y'all, so don't ask me what the hell going on.
Many differences here, including the run rate of growth in the U.S. now versus then, which is better now. But I think a lot of that stuff is sort of textbook. The market is going to tighten before the Fed actually does it. That's what we're seeing.
Mike Santoli, thank you. Let's bring in Charles Schwab, Chief Global Investment Strategist Jeffrey Kleintop, and Allspring Global Investments Head of Active Equity, Ann Maletti. Guys, good morning to you both. I mean, we have major averages all down significantly again this morning. The S&P.
I'm in a hotel, so I'm not touching nothing, you hear me? I'm in this nice-ass hotel. I'm not touching nothing. We can still see what's going on. Shit, it's all right. Don't act like you ain't never had foil behind your TV or you ain't never had grip plies on your TV. Chill out. You feel me? Y'all too goddamn perfect. You know what I'm saying? Y'all ain't grew up in the hood. Y'all act like y'all ain't never had grip plies on the TV or y'all ain't never had foil on the back of the goddamn TV. Chill out, you hear me? Y'all perfect ass. Y'all get grown and forget the shit y'all been through. Goddamn. Grown ass, rich ass. Y'all some rich ass mugs, man. Y'all forgot your ass was poor at one time, man. Shit. Nah, the TV got to be perfect and shit all the time for y'all. Chill y'all ass out, man. Shit. If investors begin to shift their focus out a little bit, and they may this week, given the earnings, like you ain't never had to have somebody keep pushing the TV around this way. Hold it right there. Chill y'all ass out, man. That shit ain't gonna bother y'all. Chill out.
In Europe had not led to sustained stock market sales in the past, and I think that there's reason for investors to consider buying.
All right, so let's see what they're talking about, then we're gonna get into it, y'all.
European and value stocks that have led when interest rates were headed higher in the past.
Interesting. Definitely want to dig into that a little bit more. But first, Anne.
Rich ass. Y'all too damn rich for me, man.
Especially this idea of quote-unquote normalization and normalized growth. Since investors do seem to be trying to wrap their arms around what that's going to look like in a post-pandemic world right now and how that's playing out in the market.
Yeah, certainly our investment teams are assessing that. And as you look at Q4 earnings, we're going to be looking at that.
We're gonna talk about some stuff right quick. Let's just see what they're talking about so we can reflect it.
Certain companies, we saw those companies be punished more. But as Mike alluded to earlier, the contagion is spreading pretty wide in this first phase of the sell-off. And I think some areas have been hit harder than others. And, it is a time for stock pickers who are willing to look at company fundamentals to go out and start looking now.
You heard that, huh? Stock pickers that look at fundamentals. This is key right here.
So, Jeffrey, I mean, the situation with Ukraine and Russia right now, which certainly seems to be a risk that is mounting, and there are many question marks around. I realize in general, geopolitics is something, at least from an equity market standpoint,
that's a fact. Expensive ass hotel.
Maelstrom, if you will, this morning of negative sentiment in general, and there are areas where this could potentially have a bigger impact. I think about oil and commodities, for example, at a time where we are talking about inflation and we are talking about the Fed. Are there certain
No, Selena.
Steer clear if you are concerned as an investor about the potential with geopolitics?
Historically, we really haven't seen a big impact. Obviously, on the upside, we're seeing some impact to oil prices and natural gas in Europe.
Let's see. I got a post in Trappers Anonymous today, too, man.
But on the downside, not that much. I mean, Russian stocks are completely disconnected from oil prices. Usually, the Russian stock market and oil prices are the exact same chart, but we really see a big disconnect there with Russian stock prices falling dramatically. But they only represent 3% of the emerging markets index, so it's really not having a huge impact there.
Selena, you got to look at what's going on with it, though. What is it losing? Remember I told you about the story changing with a business. Remember I told you about looking at the story that changes with the business. The story is definitely changing with Netflix, Selena. So just pay attention to that.
From the U.S. on security concerns, and that won't be until I think the 30th. So probably nothing to happen this week militarily in Russia.
It is remarkable, though, Ann, to watch energy trade lower. I
always talk to 500. That's my brother.
Warnings. I wonder, we got these PMIs getting awfully close to 50 once again. It's certainly going to feed, if not recessionary talk.
All right, so let's talk about something.
And people will start to discuss how the Fed manages to hike 3 or 4 times in the face of slowing growth.
That's what I'm here for, Queen, on trip.
And I think that's kind of the greatest fear is...
All right, so let's talk about a few things right quick, Aaron.
This balancing act.
So one of the things I want y'all to think about is this.
Inflation.
Right, let's have a little conversation about a few things, right? Let me turn this down. All right, so one of the things that I want us to take into consideration too is what's called an inverted yield curve, right? And basically, so typically, like long-term bonds always have higher yields than short-term bonds, right? But anytime that turns around to where the short-term bonds have a higher yield than long-term bonds, that's an inverted yield curve. And that can be telling us that we headed to a recession. Until you see that, don't worry about a recession, right? Don't worry about a recession. Let me get that out there. So one of the things that you can always listen to, like I want y'all to listen to this, listen to me well. Right, damn, I wish y'all had my Wall Street travel hoodie on, man. I don't like promoting for nobody else. God damn it. Shit. Right? Damn, I hate when I'm traveling because I don't be on my shit like I supposed to be. You hear me? All right. So one of the things that you look for all the time is the yield curve, right? The yield curve. So anytime there's an inverted yield curve, then you can start panicking. Well, not really panicking, but you know what we headed for. So one of the things I often tell the trappers about is just understanding what type of economic environment that we in. Hold up, man. I don't feel right doing this with these people shit on.
One of the things you talk about is the correlation.
You got me fucked up.
Negative, really the last, I'd say, 60 years between the bond market and the equity market. Are we poised,
I can't talk this shit without having my goddamn shit on. Yeah. All right, here we go. All right, cool. All right, here we go. Check it out. What's good, Travis, man? It's your boy, the Wall Street Trap. You heard me? You know what I'm saying? Look, man, they got a lot going on in the market right now. And it's up to me because nobody else ain't going to do it. You know what I'm saying? Everybody else want to tell you what to buy. Everybody else want to, you know, give y'all signals and all this. And that's cool. But my goal is to 100% teach the culture, the community, and everybody who on the process to building wealth, right? My goal is to teach us how to play this game every day, all day, and twice on Sundays. You know what I'm saying? My goal is to show us and to tell us and to help us learn how to truly build wealth in these type of markets, right? So one of the things I'm going to show you what you look for, like in these type of markets, is called like the inverted yield curve. And so with the inverted yield curve, so normally long-term bonds have higher yields, right, which is returns, right, than short-term bonds. So anytime we see the short-term bond have a higher yield than the long-term bond, that is an inverse effect. So we all understand inverse is like the reverse of what we really want. Anytime that happens, that signals that we are in a recession waiting to happen, right? That's a recession on the way. So until you see that happening, don't panic about a recession. Don't panic about a crash, right? Don't panic about a recession or a crash until you see that happen. Right? So that's one thing I want you to know. So if you're like, man, the market about to crash, the market, until that happens, this is why it's important for us to pay attention to bonds, right? And yields, right? Bond yields. Why is it important for us to pay attention to bonds? Because investors always, right? This is what investors do, right? So now I'm taking you into the psychology of how investors work, right? I'm taking you to the psychology, right? This is how the psychology works. When stocks become too risky, right? When stocks become too risky, one of the things investors like to do is go to bonds. Bro, you down 140? Man, I'm down about 500. It's okay. I'm not even panicking. I promise you that. And that's just on some options contracts. That ain't talking about my regular portfolio. I'm probably down about 600-some thousand now, 700,000 now right now. It's okay. Right? It's okay. You know why it's okay? Because that's part of this game. You know what I'm saying? That's part of this game. That's why I always say that it is important for us to always think long term. Right? My options contracts are long term. Right? And all we're going to do is go back, revitalize what's going on, and set new contracts. I just text my partners today. In my group chat, look what I said. I say, bro, if we patient, if we are truly patient, we can print a whole lot of money in this market. It was like, man, what you talking about? I said, listen, all we got to do is pay attention to what's going on. We don't got to try to guess the bottom. We understand that there's a lot going on right now, right? Anytime there's an uncertainty with money, the whole market is taking a beat, but that's okay. But it's not even taking a beating. The market is truly just down 10%. If y'all call that a beating, what happens when the market go down 30%, 40%, 50%? Y'all really gonna get scared, right? It's only down 10%, 15%. Y'all really gonna be scared if the market go down like it's supposed to. You can't be listen, in markets like this, I'm gonna be real with you. These are the type of markets that tell you if you truly ready to invest in stocks. Right? These are the type of markets that tell you if you really want to invest, if you're really ready for this game. See, anybody can tell you a lot of dope stuff when the everybody looks like a genius when the market is flying. You know what I'm saying? Everybody can look like a genius when the market is running up. Everybody can look like, you know what I'm saying? Everybody can look like a genius when that happens, right? No, I can't include when I'm talking about bro. That's me and my brother's conversations. So anybody can look like a genius when the market is flying, because it's easy to say, you know, this stock is going to run, that stock is going to, it's easy to say that type of stuff. But one of the things I tell Trappers Anonymous, one of the things I tell Trappers that's important for us to do is understand the value of a business. The reason why it's important for us to understand the value of a business is because the market doesn't give us value. The stock market prices are based on how people feel, right? And we don't want to care about how people feel. We want to know what the business is worth. Understanding what the business is worth. Understanding what the business is worth is way more important than the stock market price. Why? Because this now tells us if the market, if we were paying too much for a business, or if we were paying fair value for a business, right? So one of the things I told my people was, I said, this is a market where you can make a lot of money. Because, why? Because there's uncertainty around the dollar, right? Anytime there's uncertainty around the dollar, right? Anytime there's uncertainty around the dollar, the market will panic. Why? Because the dollar, even though it's worthless, it is the means of exchange for all assets, right? Even though the dollar is worthless. Trap, how's the dollar worthless? It can't be worthless if it's still a means of exchange. Okay, true. Check out. Let's understand this. Let's just look at this from a sound and logical perspective. Right? If you had negative $30,000 in your account, the only way anything positive can come from that account is if you first do what? Let's just think about it. If you had a negative $30,000 in your account, if you had a negative $30,000 in your account, the only way that you could turn that into a positive is if what? You pay the $30,000 back. Right? That's the only way that's the only way anything positive can come from that. Right? So the only way the US dollar can truly be positive is if they pay off the $30 trillion in debt that they have. Right? It's the only way that the US dollar can be of value is if the US first paid off the 30 trillion that they owe. Right? But what happens is it is still a means of exchange because so many people's wealth is attached to the dollar. Right? So what the Fed said to America was, look, bro, we was already printing $120 billion a month. We was buying back bonds. But they not about to do that no more. And so because they not about to buy back bonds no more, they are now letting the market correct itself. Right? The market is going to correct itself. And so now what happens is that takes the panic, that takes away the false confidence that the market had. Right? So the market had false confidence. The market had false confidence because they knew the Fed was buying bonds. And so what happens when the Fed buys bonds, the Fed now puts money into the market. And they buy bonds. So the Fed say, yo, we're not buying bonds no more. We're going from 120 million a month to 30 million a month. That's all we're doing. So that causes panic. And you already in an low interest rate environment. Right? And so what happens is now the Fed is going to have a talk next week. If the Fed doesn't say something positive, the market is going to fall even more. Right? if the Fed doesn't say something positive, if the Fed sit back and be like, nope, yo, we not buying nothing, we good. Because the Fed has a balance sheet. So if the Fed sit back and be like, nah, dog, we not doing none of that no more, we good, then the market is gonna fall some more. Right? The first post I made of the year, I want you to go look back at it. I said, these are the 5 stocks that I like, but I expect us to have a correction this year of 10% or better at some point. I said that. My first post of the year, I said that. The reason why I said that was because, here's why I said it. Here's why I said it. The pandemic we had, yep, so you said that, facts. We had the shortest bear market ever. We had the shortest bear market ever. Stocks started surging. It only lasted for a couple of days. So what happens is, the market never, I'm going to be real with you. There is no reason why. There is no reason why. There is no reason why during a pandemic where people were losing houses, where people were losing jobs, there was no reason why we should have had companies worth $2 trillion, $1 trillion. No company should have been worth that. In an environment where the economy wasn't in good shape. There was no logical reason why, I'm going to be real, there was no reason why Apple should have been pushing $2 trillion almost to $3 trillion. There's no reason why Amazon should have been $1 trillion. There's no reason why we should have 3 companies in the trillions when people are losing jobs. When there's no reason why that should be happening. Right? It shouldn't have been happening. So, yes, it was a great run. People made money. But now, this is time. But if we notice something, here's one of the things we heard. Here's one of the things we did here. That there was about 3... There was $26 billion on the sideline waiting to be invested. There was $26 billion on the sideline waiting to be invested. They had more money on the sideline than ever before. They had more money on the sidelines than ever before. Why? Because they understood that this had to happen. Right? Let's go a little further. One of the things that was happening was we were having what is called a rollover correction. I'm giving y'all game right now. I'm letting y'all know that not only do I study the market, I study economy. Right? I like to call myself like a semi-economist. Right? You know why? Because if you learn the economy, it goes hand in. Understanding the economy is the first cousin to understanding the stock market. The reason why most people won't be successful in the economy, that's why one of the things I teach in Trap Masters is learn the economy. Like I teach them stuff about the economy in my mentorship because when you see these things happening, when you start seeing these things happening, this is what's going on in the market. Right? The economy is the first cousin to the stock market, yo. You know what I'm saying? Like 100%. Right? If we can start understanding what's going on in an economy. Listen, let me tell y'all something too, bro. When it comes to building wealth, yo, it's more than just buying a stock. You think these people get wealthy just from, I'm going to buy a stock? You think these people just get wealthy from guessing? We got to stop guessing. And we got to truly say, yo, like, cool, this was going on in the market? Not a problem. Not a problem. Because there's nothing new that they're going to do that's going to happen. Right? This is why Trap got me into macro. You got to understand microeconomics. Quantitative data, you got to understand these type of things. And it's not nothing that you can't. Here's the dope part is. Here's the dope part. Here's the dope part is. You're actually smarter than what you realize that you are. Right? Let me show you how smart you are. That you can be an economist based off data like this. Check this out. When the new iPhones drop, somebody tell me what's going to happen at all Apple stores. When the new iPhone drops, what is going to happen at all Apple stores around the country? What's going to happen? Right? When the new iPhone drops, what is going to happen to all of the Apple stores? Boom, somebody said they flooded. At that point, check this out. Because you understand that, guess what you understand? Macroeconomics. You understand that because of the event, here's the things, quantitative data that's going to take place. Because you understand that, you understand macroeconomics. 100%. Because you understand that, because all it is saying that you understand that during an event, these are the things that are going to transpire. That's it. But they use these words, macroeconomics, microeconomics, quantitative data, qualitative data. They use them words to throw you off. Right? They use words like that to throw you off to make you feel like you can't. Like, damn, what that is? I don't know what that is. No, you understand exactly what it is. You understand that if you a hustler on the block, you understand that on the 1st and the 3rd, people get checks. So you give credit on the 30th and the 29th to certain people. Why? Because as soon as they get their check, they're going to give you them. Cool. Those are customers you can give your money to, your product to. That's understanding economics. If you can understand things like that, you can understand economics. I promise you. That is economics. Economics is understanding the cause and effect of the economy based on certain events that take place. I swear. When people ask me, I'll be like, yo, this shit remind me of the street. It's the same thing. They just use these beautiful 8-9 letter words, 8 and 9 character words that make you feel crazy. But if you can understand, okay, the 1st and the 3rd, these when the checks come out. So when the checks come out, I can give something on the 28th, the 29th, the 30th, because I know when the check comes, they're gonna pay me my money. I done gave a product already, that I done sold a product already. It's cool. That's economics. In this economic environment, this tends to happen over time. That's economics, family. That is economics. You feel me? And once you understand that, you can play this game. So let's move a little further. If we can understand economics on a basic level, we can be great at being investors. Right? The reason why is because here's the thing. If we understand that there's scarcity around $1, if there's scarcity around $1, that means that the markets don't like uncertainty. right? The stock market doesn't like uncertainty. The stock market thrives based on confidence and based on money supply. That causes the market to run. Confidence and money supply. Why is the market going to do it? Because the Fed said we stopping the money supply. So when they stop the money supply, 100%. When they stop the money supply, they go into what's called quantitative tightening. Right? When they stop the money supply, they go into what's called quantitative tightening. Right? When they stop the money supply, they go into what's called quantitative tightening. Trap, why is that called quantitative tightening? Because they're not easy. So quantitative easing is when the Fed printing money. Right? They not letting you feel the effects of what's going on. You know, ease the pain. Right? Ease the pain. Hawkish. Easing the pain. So they easing the pain. Right? I'm easing the pain. You know, rubbing the back. Take these, look, take this. I don't want you to feel it. It's okay. They lubing the economy. Right? They lubing the economy up. Right? They easing. It's called quantitative easing. When they say nope, when they take the money away and say nope, we not pushing them, we not flooding the market with money no more, that's called tightening. Why is it called tightening? It's called tightening because now the market has to do the work on its own. We're not in a depression. We're nowhere near depression. It's only 10%, man. We're nowhere near depression, fam. Don't be so drastic. Right? So when the Fed starts pumping money in the market, what happens is the market now has to recalibrate itself. Like if you're in a hood, how do you know you use the scale too much? The numbers start messing up. The 7 grams start being 7.2 or 6.8. 21 grams start to be 21.6. 20 point. They like, damn, bro. Like, damn, why am I? Damn, I know I'm supposed to get this many. Wait, let me take the scale. Let me hit the tear button. Once I hit the tear button, I put the nickel on it. Once I put the nickel on it, the nickel is now going to recalibrate the scale. You feel me? The scale is off. I'm either giving away too much or the dude think I'm trying to get over on him. Either way, it ain't good for business. Because now the dude talking about, man, let me bring my own scale. This don't look right. They think you trying to give it to them wet. They think you trying to put extra knots in your bag. That ain't what's happening, bro. My scale off. So you got to recalibrate the scale. What do? You hit the tear button. Once you hit the tear button going to put the zeros on. It's going to blank. Then you put the nickel on there. It's going to come up 0.5. Cool. Why? That's what the nickel weighs. 0.5. Once you put that on the scale is not good. You can go back to now. Look, this 28 grams without the plastic. Once I put the plastic on, it's 28.2. It's all love, bro. Once I put the knot in it, it's 28.3. It's okay. Now you look like I'm showing love. It's cool. It's cool. It's cool. You feel me? So, what I want us to understand is the market now has to recalibrate itself. Right? The market has to recalibrate itself. And so that's what's happening right now. The market is recalibrating itself. Right? The market is recalibrating itself. The market is now putting itself in a situation where it doesn't need the Fed to help it. It is now saying, okay, the seller's going to sell, the buyer's going to buy, whatever happens is going to happen. Right? The seller's going to sell, the buyer's going to buy, it is what it is. Right? Without the help of the Fed printing money for them. Right? Without the Fed printing money for them. And so what happens now is, now stocks get to come to their true value. Stocks now get to come to their true value. This is why I always say you can make more money during a drought. Right? This is why we say you make more money during a drought. Here's why. Because stock prices has been inflated so much. Right? If you hear, I was telling my trap masters this the other day in class. If you hear that a company is trading 100 times earnings, that means the stock price is 100 times what is earning. Right? So a lot of times companies have been trading for way more than what they've been able to earn. That's what's been happening during the pandemic. Companies have been trading for way more than what they've been earning because, here's why. Because the Fed is pumping $120 billion a month inside of the market. People were bullish, right? So because the Fed was pumping so much money in the market, everybody just kept saying up, 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 up. The Fed keep printing money. Everything going to the moon. Everything going to the moon. Everything going to the moon. Why? Because the Fed keep printing money. The Fed keep printing money. The Fed keep printing money. Up, 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 up. The Fed keep printing money. The Fed keep printing money. The Fed keep printing money. Up, 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 up. As long as the Fed keep printing money, we're going to keep buying. The Fed keep printing money. Yup, buy. The Fed still printing money. Yup, buy. And so what they did was they bought a lot of value companies with great balance sheets, but also companies that shouldn't have been getting this type of energy at all was running up. Right? And so now, again, the Fed now says, we're not spending no more money. What you mean you're not spending no more money? Man, we're not spending no more money. You serious? We not. Matter of fact, we going from 120 to 30. Wait, how you gonna do that? No, sell. Now what's happening? This is now saying the people who are at the top, cash out. The Fed not putting no more money in the thing. Cash out. They're not printing no more money, y'all. Cash out. So now everybody cashing out. And so because everybody cashing out, it's now causing the market to correct itself. Now, let's go a little further. What the market loves to do now is say, let's cash out. And because everybody cashing out, I want to do something. I don't want to take my money and just sit on the side and not do nothing because the money is worthless. So now let's take the money and put it into bonds so we can at least get some type of return on our money. Right? Let's put the money into bonds so we can at least get some type of return on our money. Typically, long-term bonds have greater returns than short-term bonds. Right? Typically, this is what I'm about to get gangster with y'all. Typically, long-term bonds have greater returns than short-term bonds. Why? Because you're going to get rewarded for holding the money over the long term. Right? Check this out. If ever you see short-term bonds having greater returns than long-term bonds, that is called an inverted yield curve, And now it's letting you know we're headed for a recession. Because short-term bonds should never have a greater yield than long-term bonds. Short-term bonds should never have a greater yield than long-term bonds. If any time that happens, you can say, okay, boom, we have an inverted yield curve. Let me put as much money as I can on the side because it's recession time. Anytime you see that the short-term bond yields are higher than the long-term bond yields, you can say, yo, we're headed for a recession. 100% of the time. 100% of the time, if you get an inverted yield curve, you are headed for a recession, and you should now put cash on the side. So right now, look, Zoom is down 63% over a year. Let me tell y'all how gangster this is. I said to y'all this. I said, yo, Zoom hasn't made the corrections that it was supposed to make. I sold it at 248. I said, yo, the story just changed. And it has been falling ever since. How can you indicate that? Go look at bond rates, family. Go look at bond yields. That's what I'm telling you. In order to be a great investor, you can't just look at stock prices, because stock prices are only an indicator of how people feel. You got to look at other things, other indicators. You got to look at, like, what are the yield curves looking at? What are the interest rates that's going on? These are the things that help us understand what's going on in the economy. How do you know when a story changed? Anytime the reason you bought the stock no longer exists. Right? Anytime you see, if you bought a company because of this and that no longer exists, the story has now changed. It's up to you to now say, because the story changed, do I still want to be here or do I not want to be here? Right? So for me, it's about educating y'all on how to play the game. It's not about me telling y'all what stocks to pick. If you ever ask me what stock to pick, I'm going to be like, I don't know. You feel what I'm saying? I'm going to never tell a person what stock to pick. One, because every investor has a reason why they love a particular stock. Why I love a stock and why you love a stock, it's probably not going to be the same reasons. So why would I tell you to buy a certain stock? Even when I told people to buy Chipotle, I was like, yo, Chipotle going to kill it. But the reasons why is because I knew why. When I tell you, yo, they got moat, they got pricing power, great management team. If you don't know that, you're not going to buy that. You should never buy a business based on what somebody else said. I need that powerful, profitable portfolio. It's coming, you hear me? Right? So I always want us to understand that, yo. And I'm personally not going to tell you, like, buy Apple, buy Microsoft, buy Amazon. I'm not going to tell you that. You know why I'm not going to tell you that? Because I truly know companies that can outperform those businesses. In order to build wealth, y'all, during this market, I'm going to be real with you. I need you to start getting comfortable with just reading on businesses. I need you to start understanding the importance of reading and understanding the businesses that you want to buy. And here's why this is important. I'm going to be real with you. The reason why it is important for you to understand the businesses that you want to buy is so when those businesses start declining, you know whether to buy more or you know whether to sell it. Feel me? That's the reason why I personally tell people, I'm not telling you should you buy a stock or not. I'm going to tell you, go look up the information on the business. Why? Because you can understand, you need to understand what a business is worth. You need to understand what's the story. You need to be able to, one of the things I teach my trappers is this: whatever business you're about to buy, create a story around it. Create a story around it. Create a story around the business that you want to buy. And the reason why it's important for you to create a story around the business you want to buy, the reason why it's important that you create a story around the business that you want to buy is because if you create a story around the business, you know now if the story changes, I no longer want to buy this business or I want to hold on to this business. You can start to understand the inside, the details. It's the intricate details within the business that teach you whether or not you want to buy the business. And that's what I teach people. That's what I teach people. That's what I teach people. I want you to be an investor. I want you to look at this market on days like this, and I want you to look at companies and have your watch list already out of companies that you want to buy, companies that you're interested in, companies that you know the story behind those businesses. I want you to understand what's going on. Give an example of a story, okay? Example. I like Chipotle. Trap, why you like Chipotle? Because, one, every time they set up a store, they build relationships with all the farmers around that area, in a certain radius of that area. And then they use fresh vegetables from the farmers in that area. I love that. Another part of the story is, for Chipotle, what I love is they allow employees to become store owners. And as you increase in position, the person who you promote to another position, as they increase, so does your pay based on what they do. You can start off in Chipotle as somebody that make guacamole and eventually become a store owner. Chipotle loves to build restaurantpreneurs from within their brand so that people can already understand the business. Another thing about Chipotle, the management is great because they don't take on debt. So the company has expanded and grown the business without taking on debt. Because of that, I understand the story based around this business. So when the E. coli happened, I understood what happened. They told us what happened. It wasn't nothing bad. It was because one person didn't wash their hands and they got one person sick. Cool. That's what happened. Can they fix that? Of course they can. How? Well, they started putting signs up saying, do this, do this, do this, do this, do this. All right, cool. Did that change the story about the business? Because, no, it didn't. It didn't change the story at all. Nothing bad. They didn't say we're not dealing with farmers no more. They didn't say none of that. All right, cool. So when the pandemic happened and everything went down, I knew that the story behind Chipotle didn't change. I understood this was the market overreacting to what was going on. So what I did was I bought more. The story behind the business didn't change. The market did what it was doing. The market did what it was doing. The story behind the business didn't change. Feel me? The story didn't change. The reason why I love the business didn't change. The stock market just did its thing. And the stock market just got emotional. And this is what the stock market does. Anytime something happens that causes fear, anytime something happens that causes uncertainty in the market will fear and it will sell off. Anytime the market has fear and it sells off, if you look at your business and it's not an event that is truly sector specific or industry specific, or the story didn't change behind the business, then that's how you determine if you're in or out of business. Man, look, man, it's your boy Wall Street Chapman. I got some stuff to go do. I got some business to take care of, man. I'm home, so I got some stuff to do. I hope I gave y'all some game. I hope y'all, got some game from me just now. I hope I helped a lot of people out. I will post live in a few. Do me a favor, man. We got the Wall Street Trapping Bundle. The link is in my bio. We got the Wall Street Trapping Bundle, man. It's dope. You get the Wall Street Trapping course and the 2-day workshop. You get the Wall Street Trapping course and a 2-day workshop. Definitely come join Trappers Anonymous, man. It's $47 a month. You get 8 weeks free when you get it for the year. We didn't have a class last Sunday just yesterday, because I came home and wanted to spend some time with the family. We do everything Monday through Sunday, man. So definitely come join Trappers Anonymous. All my trap masters, I love y'all. Have a great day, man. One more thing. Click the link and go get your Trapper attire, man. Click the link and go get your Trapper attire, man. We got the hoodies. We got the jogging sets. We got the Wall Street Looks Like Us Now jogging set. We got the T-shirts. It's not a merch line. It's an apparel line. It's a big difference. Go click the link in my bio and get your certified Wall Street Trapper gift, man. I love y'all. I appreciate y'all. Thank y'all for the support. When you copping, man, we want the world to know that we trapping. Y'all see what I did? I took the hoodie. I said, I'm not promoting y'all. Let me put mine on. You feel me? So do me a favor, man. I will appreciate that, man. I want the world to know that we trapping. We the new face of Wall Street. It's not your grandpa Wall Street. It's not your great-great-grandpa Wall Street. It's a new Wall Street, and we a part of that, man. So definitely, man, go click the link in my bio. Support that. I appreciate that. We got some heat coming. We building that up. This is going to be the uniform. This gonna be the uniform for the new trappers, man. When I came up, the uniform of trappers was Dickies and Timbs, you feel me? And Dickies and G-Nikes, or even New Orleans Dickies and Valleys. We new trappers. We new trappers. We got all sizes, man. Ladies, we got the extra smalls all the way up, man. Come rock with us. I appreciate that. Support that. It's your boy, the Wall Street Trap, man. I love y'all. Go follow Trapper Apparel Inc. Trapper Apparel Inc. Go follow. That's the page. We'll be doing giveaways. We're gonna be doing prizes. We got a lot of stuff coming up, man. I'm telling y'all, y'all gonna love what we doing, man. It's your boy, the Wall Street Trap, man. I'm out.